In January, Tesla has been dragged into a stiff headwind in recent months. In particular, the new tariffs imposed by the Trump administration, the political turmoil created by Elon Musk in Europe, and the massive decline in the company's stocks are deeply shaking Tesla's once untouchable image. The company, which used to stand out as a brand that took the industry by storm and was considered the unrivaled leader of the electric vehicle market, is now experiencing serious setbacks both in the financial market and in sales charts in Europe. Tesla shares have suffered a near-historic decline in recent weeks due to the global turmoil that started with Trump's trade tariffs and Elon Musk's political moves in Europe. While the company was exposed to a new wave of sales on Wall Street with the United States Secretary of Commerce's warning Tesla stock is dangerous turn to different stocks, on the other hand, the company suffered an unexpected blow with the Musk effect and increased competition in the European market. Especially in Germany, Tesla sales declined by nearly 70% in January-February. And the rapid decline in market share in France and other European Union countries further deepens the company's collapse in the stock market. There are many factors behind these developments. United States trade moves, Musk's high-profile political statements, a car market struggling with price cuts, and European consumers distancing themselves from Tesla. The company's shares have been on a sharp downward trajectory since the beginning of the year. Some say it is the result of a hollow panic. Others say it is a persistent structural problem. It seems that it cannot be explained by a single factor. Competition from both China and Europe, a tough economic environment with rising raw material costs, and Musk's political backlash all combine to weaken Tesla's image and economic power. Even the United States Secretary of Commerce's comments about buying Tesla shares had the opposite effect on the market, with the company's shares falling even further after the announcement. Investors questioned the strangeness of the official hand's involvement, and instead of restoring confidence in Tesla, it had the effect of shaking it. The numbers sound the alarm. 53%, collapse, 7%. Losses in one day. Tesla shares have plummeted nearly 53% since the beginning of the year, shocking shareholders. According to Bloomberg data, in this collapse, which accelerated especially in mid-March, there was a loss of up to 7% in value in one day at the close of March 14th. The market value of the stock decreased from 770 billion United States dollars to 635 billion United States dollars, with a monthly decline of nearly 20%. Royal Bank of Canada lowered Tesla's target price from 220 United States dollars to 175 United States dollars, saying, "We are concerned about competition in China and Europe and Musk's Twitter-focused agenda, renewing investors' fears." Elon Musk has long been at the center of political debate. The trade minister's insinuation that we see Elon Musk and Tesla as risky was salt and pepper for Tesla investors. Upon these words of the minister, Tesla shares immediately fell by 6%. This decline was also blended with the tariffs brought by the trade war between the United States and China. While Trump's imposition of additional taxes on Europe, Canada, and China with the slogan, "We will protect American production," increases Tesla's supply costs in these country markets. Retaliatory tariffs also lead to an increase in the company's non-United States sales. Therefore, Tesla, which has suffered from Trump's tariffs both on the production and sales side, is also struggling with the uncertainty caused by Musk's political polemics. The most worrying picture for the company is in Europe. Electrek announced that Tesla's electric vehicle sales in Germany in January fell by 70% compared to the same period last year. This means that in Europe's largest automotive market like Germany, Tesla has lost a large market share in a short period of time. Model 3 and Model Y deliveries are well below expectations, the French and Italian press reported. According to Euronews, Elon Musk's political stance and his polemics on Twitter are creating a negative image among consumers in Europe who have a perception of environmental and social responsibility. CBS News even suggests that the decline in Europe is going in the opposite direction of the EV trend, meaning that while other electric vehicle brands are growing, Tesla is declining. Investors are no longer just nervous about Musk's political outbursts. They are also concerned about the company's lack of clarity on its long-term strategy. The United States Secretary of Commerce's statement that Elon Musk intertwines his political moves with Tesla, which poses a great risk to the stock, was the last straw. Tesla's corporate governance needs to be clearer. Musk's personal decisions are overshadowing the company, the minister said. according to Axios. These words were perceived as an official warning and accelerated the wave of sales against Tesla on Wall Street. This is the period between March 14th and 16th, when $70 billion United States dollars in market capitalization was wiped out. Figures showing how bad things have gotten in Europe confirm Tesla's sales declines in some major countries. The decline in the German market, reportedly as much as 70%, is hitting the company's performance on a European scale hard. This suggests that Tesla's once rapidly expanding irresistible growth story may no longer be valid. In the electric vehicle market, a strong push by Volkswagen, Renault, Stellantis, Hyundai, Kia, and others already presented a challenging backdrop for Tesla. Musk's statements that offended some European leaders, his clashes with politically divergent views, or his controversial posts on social media, all of these seem to have mobilized consumer sentiment. Many European customers may have begun to move away from Tesla, citing less sympathy for Elon Musk. The Trump tariffs are an additional blow. America's protectionist moves often have unpleasant consequences for Tesla. The company was already aiming to remain competitive on a global scale by integrating its production and sales networks in China and Europe. But increased logistics costs with the new tariffs and additional customs costs in the European market could strain Tesla's profit margins. The tendency of European commissions and some governments to protect local producers also puts Tesla at a disadvantage. Under these circumstances, the company, which feels the competition even more severely at a time when its brand perception is damaged, continues to lose value rapidly in the financial markets. Not only the reaction of the public in Europe to Musk, but also the moves of Chinese brands to enter the European market are squeezing Tesla. Business Insider emphasizes that the 53% collapse in Tesla's global sales has been accelerated by the European foray of companies like BYD and NIO. While BYD plans aggressive entry into EV-friendly countries like Germany and Norway, Tesla's factory investments and model updates seem to have slowed down. Despite the commissioning of the Tesla Giga Berlin plant, especially in Germany, the price advantage of European and Asian manufacturers benefiting from local incentives and Musk's spread over time strategy are turning the competition against Tesla. The decline in share value has also been the subject of comments such as, the price was overinflated. Now it is coming down to its real value. For years, Tesla's shares have been priced on future growth potential rather than the company's actual profits. As rival brands enter the electric vehicle scene, multiplying their production capacities and increasing their market shares, Tesla's position as the sole innovative leader is being challenged. The market contraction or loss in Europe reveals precisely this competitive reality. Production disruptions during the pandemic, problems in chip and battery supply, and rising